Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So, Papa Powell came out today, was pretty jolly and happy, basically pushing stocks and bonds to new highs and new highs and new highs on the day, right? And most importantly, we got Dow Jones making all-time highs. We got the also NASDAQ futures cracking at the highs as well. S&P 500 very close to the highs as well. Russell 2000 rallying today. And we got the 2-year, 5-year, 10-year, 30-year yields all dropping aggressively. All because Powell mentioned in its projections that they see another rate hike more than what the markets were expecting. Fantastic. Christmas stuff's falling all around me. But anyways, so what happened today? What caused markets to just skyrocket today? What caused the equity markets to completely rally, as you see back here? And it was the dovishness that came from Powell. It was Powell basically coming and solidifying that, hey, you know, we're basically at, you know, peak rates. That's what he said. We are either at or close to very peak rates. And that I wouldn't be, and he said he wouldn't be surprised to start talking about rate cuts next year as well. The projections, most importantly, you know, the number, let me just pull it up real quick here. We had the dot plots, which basically showed majority of the Fed members seeing lower rates next year. So we had in the September's projection, 2024 was around 5.1% in terms of interest rates. That came down to about 4.6% in today's projections, today's revised federal funds rate projection. So we're talking about a little bit more rate cuts here than what was anticipated in September, right? So also, on top of that, let's not forget that in September, they also penciled in that we're going to see 2 rate hikes. We did not get a rate hike today, and we didn't get 2 rate hikes, so, you know, Powell basically kind of lied to us, but it's okay. We were tracking the data, and as I was mentioning here, that very unlikely we would see another rate hike. And as I was saying in the past couple of months, I've been saying that Powell's in pause mode. The U.S. is in pause mode when it comes to rate hikes. So they're done. They're completely done. Now, of course, Powell did come out and did say that if we need to hike rates, we will do so. But as of right now, it's looking pretty good in terms of inflation. It's coming down, and the projections for 2024 for federal funds rate, they show that there is more rate cuts than anticipated. So on the projections, basically penciling about 50 basis points, 75 basis points of rate cuts. The expectation was that number was going to be actually 4.9, around there. So it actually came in 4.6. And right as soon as those projections came out from the Fed, the stock market and the bond market completely rallied, right? On top of that, we also got the statement. So very important key line here. Two important lines in the first paragraph in Powell's statement that was changed. So in the old statement in September, it said, recent indicators suggest that economic activity expanded at a strong pace. This was changed to, recent indicators suggest growth of economic activity has slowed from its strong pace. Basically saying things are slowing down, growth is slowing down. Okay. But the most important thing, the most important line that was changed was regarding inflation, which is very key. And it said here, the old statement said that inflation remains elevated. This is what they said in September. This line was changed to, inflation has eased over the past year, but remains elevated. So inflation has eased, finally acknowledging, okay, yes, inflation has finally eased. Although we did hear in the press conference saying that we still need to see a couple of months more of weaker inflation data before we start getting our hopes up. But the fact that he changed that in the statement basically tells you that, oh my gosh, right? You're starting to now acknowledge inflation has eased and we're on the path to hitting 2%, which means we're on the path of continuing to be in pause mode, which means that sooner or later we're going to get the Fed pivot, which means sooner or later we're going to start to get rate cuts, right? Another big thing here that was mentioned in September, they said in determining the extent of additional policy firming that may be appropriate, to return inflation to 2% over time, was changed to in determining the extent of any additional policy firming that may be appropriate. So basically saying that, you know, in September, that they were saying that, okay, we're going to continue for, you know, tighter monetary policy, to now saying in determining if we need any more tightening required, then so and so and so, right? So very, very dovish line in the statement, very dovish in terms of the federal funds rate, the projections of where they see rates. They're basically acknowledging rate cuts are coming next year in 2024. This is out from the Fed, and you can expect, right, next year and onwards, you're going to get more of, you know, more of the federal funds, sorry, the FOMC members come out and basically push this dovish narrative now. Now it's completely shifting and changing. You're going to hear more of a dovish tone and dovish talk from the central banks, right? And especially from Waller, who was basically pro rate cuts and was the one to basically say that if we see a couple of months of weak inflation data, we could start to see rate cuts, right? And now we have Powell basically confirm that dovishness. So very interesting to see that shift there. Now the markets, the bond markets are basically pricing in for next year about 100 and, you know, the swap market's pricing about 130 basis points of cuts next year. So we can see, you know, rates go from, it's around, sitting around the 5.25, 5.5% down to the 4% level. So that's what the swap markets are pricing in, even though Powell and the Fed is just penciling in right now 2 or 3 cuts, but the markets are pricing in more cuts for next year. And very interesting here that you have basically a 90% probability that we're going to get rate cut in May. And March, there's about 70, 80, I think it's a 70% probability of a rate cut to start right in March, first quarter of next year. So that probability can change significantly if the data changes, right? If inflation completely changes. So we could see that, we could see that if inflation continues to come down lower and lower, then that probability of a rate cut in March is going to start to also go higher and higher, and that probability is going to change. Now, if the number comes in hotter than expected, then that probability is gonna lower down, right? It's gonna come lower. So right now the markets are pretty optimistic that we could start to see the pivot, the rate cut in March of next year. So another key point there as well. Now, a couple of things was mentioned during the Q&A at 2:30, the press conference. I'll just highlight a few things here. Basically, one key line that was mentioned by Powell is, we are very focused on not making that mistake of holding high rates too long. Whoa, that is very dovish. Wow. Let me read that again. We are very focused on not making that mistake. Not making that mistake. What mistake? That mistake of holding rates too long. So basically, he's setting up the pathway that if shit hits the fan and things are getting really bad, we're not going to hold rates for a long time. We're going to react. And we don't want to make that mistake of keeping rates high for too long, because it's going to create a lot of pain. So meaning that Powell is ready to take action on cutting rates when necessary, when it's needed, and not wanting to make the mistake of keeping rates too high for too long. So that was very, very dovish, which basically was liked by the stock market and the bond market. Couple of other points Powell also mentioned as well. It said the path forward is uncertain, full effects of tightening to come. He also mentioned that QT tightening is still going to continue on, even though that they've stopped the rate hikes. And it was also mentioned by other Fed members that they could be doing rate cuts while still tightening on the balance sheet side of things. Now, a couple of comments made by Powell here. Growth in economic activity has slowed substantially. Given how far we've come and given uncertainties, we are proceeding carefully. Inflation has eased with significant rise in unemployment. Labor demand still exceeds supply, but gap has narrowed. Wage growth appears to be easing. Activity in housing sector has flattened out. High interest rates also weighing on business fixed investment. Lower inflation readings are welcome, but we will need to see further evidence. So need to see further evidence of inflation. But guess what? You've already sealed the deal that they're done with raising rates and probably going to head towards the cutting cycle next year. We anticipate that the process of getting inflation all the way to 2% will take time. So still saying that 2% is going to take time, especially if this is going to be a soft landing. He basically projects 2% is going to be hit in 2026. But you know, even with 100 basis points of rate cuts, right, that basically brings the needle from around 5% to 4%. It's still high up there. That's still going to create some sort of tightening pain in the market. So keeping rates higher for longer, even though if you cut by 100 basis points, is not, you know, even 50 basis points or 75 basis points is still, rates are high compared to COVID era, right? Pre-COVID, or COVID era, I should say. And he also said we're highly attentive to risk that high inflation poses to both sides of our mandate. We believe that we are or at near peak rates of the cycle. We're prepared to tighten if appropriate. We will keep policy restrictive until confident path to 2%. Inflation officials don't want to keep possibility of rate hikes off the table. So basically saying we could still, you know, hike rates if needed. If something really screws up and you get oil, you know, making new highs and inflation comes up, then they can come back and attack with higher rates. But today was basically the day right before Christmas, giving the Santa Claus rally, giving all the rally in the equity markets, the bond markets, gold, Bitcoin, all these asset classes higher and higher, all from Powell basically giving the green light that, hey, you know, we're basically done here. We're basically at restrictive level. We're going to continue to assess. And we were thinking about one rate cut. We might be doing 2 or 3 now. Right, so basically getting more dovish, and you're going to see that as data continues to get worse off, more layoffs happen, and so on. You're going to see the FOMC become more dovish and dovish, right? The other thing also to mention is that we also have elections coming up at the end of the year. Things are also going to get political there as well. Next year, 2024, right? September time and onwards. And that's when things will really ramp up, and so you can expect some political stuffs happening around there as well. And also let's not forget that even though rates don't come down quite significantly and they come down slowly, we still have a lot of refinancing for a lot of loans and mortgages for a lot of people and businesses as well that are coming due next year and end of next year in 2025. So even if you do get 100 basis points of cuts, doesn't mean it's that's it, we're done here. It could still create some pain, right? It could still create some problems within the economy. And also it was talked about in the press conference from Powell about recession, right? Mentioned a couple of times that we avoided the recession this year, possibility we could see a recession next year, right? Doesn't expect unemployment rate to skyrocket, and that's where he left unemployment rate at 4.1% next year at where it is. But what the sense I got from the recession comments and the questions that were asked during the press conference, the sense I got was that I think Powell and the Fed sees demand is going to start to deteriorate quite a bit next year, and that could tip the economy into recession either next year, end of next year, or start of 2025, right? However long it takes. So I think that's what they see from all the tightening that they've done. That's why they're pausing here, right? That's why they're pausing. That's why they've been in pause mode since September, right? September, October, November, December, right? We've already had 4 months, and then we're going to get January, February, March. That comes up to be almost 6-7 months there as well, right? And then March, if they start to cut rates, so they basically pause 7 months there. Could they go more? Sure, they could pause more and then start to cut rates, right? So they've already been in pause mode for some time. They're starting to push back because, again, like, mentioned in the statement, in the press conference as well, that there is some possibility of this recession, of demand slowing down. And you're hearing it outside as well from companies as well. Hasbro cutting 20% of their jobs, of employees, right? Cutting jobs out there. And you hear also a lot of companies out there starting to slash workers and banks and whatnot. So it's starting to slowly happen, right? And why to cut rates, especially, start to sound dovish. Is the Fed worried about something? Is there something that he sees that no one else sees for 2024, right? For the future to come? We will find out. We will find out. We will see if this soft landing ends up being a hard landing, or is Powell really a hero, right? Is he a hero and did engineer a soft landing, right? Gun against my head, I don't think it's going to be a soft landing, right? I think that, the signs are starting to creep in, and the need for starting to ease is required, because if they don't start easing now, and as renewals kick in, things could really, 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 really get bad. So let's see what happens, right? But other than that, this was the big day, the big event for the month. Also CPI was as well, but this basically was the nail in the coffin, telling you that, okay, we've been in pause mode, and we're gonna start thinking about rate cuts next year. So expect a lot of rate cut language to come out next year. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.